is up 10%, the combination of the two ETFs has to buy over 100%, over 100% of their total AUM on that day.
You got to stop telling people about this stuff, Rob, because then Katie writes about it and she blows up your spot, right?
Yeah.
Because then your $5 million trade gets ruined by somebody coming to the market.
I'm sorry.
With size.
It's a game, and the game is coming to an end.
It was fun while it lasted, though.
But, you know, somebody's launching an ETF on it, so it's out there.
There you
Rob,
go.
awesome to have you spend some time with us. Thank you so much for coming in. Research Affiliates Chairman and Founder Rob Arnott. Let's talk about some of the movers on our radar today. Skechers is a shoemaker. You may know the brand. And it is the latest to pull its annual guidance. So Skechers down 3.4%. It is a kind of a down-ish
They have
day
the light up sneakers
right
though,
now. We have T-Mobile missing on subscriber additions. As we know, some have missed, some have hit in terms of the big two. T-Mobile in the former category. And then Colgate cuts sales and profit view on a $200 million tariff hit. I understand the sales, but in profit, I mean, do you have any choice but to buy toothpaste?
That's the thing. You would imagine that they have some pricing power when it comes to their very staple-like products, but it'll be interesting to see how that story develops. Meanwhile, coming up, Morgan Stanley's Jitanya Kandari on the Sell America trade. We'll discuss next. This is Open Interest. All right, welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, Hasbro getting upgraded to a buy over at Citi thanks to its underlying business momentum. The toy maker beat analyst estimates yesterday. Also said it's in good shape to weather the tariff increases. Shares up about 0.8%. Next up, we have Lowe's getting upgraded over at KeyBank, along with its peers Williams Sonoma and La-Z-Boy. The analyst says that the recent pullback creates opportunities, pulling back a little bit more today. And finally, we have UBS upgrading Philip Morris to neutral as it sees strength in the tobacco company's smoke-free gross margins. Shares pretty much unchanged. Speaking of unchanged, let's take a look at the stock market right now. The S&P 500 almost perfectly even on the day. Now, there you can see it, Even if this holds, even if the S&P 500 doesn't do anything today, it's still higher by about 3.8% on a weekly basis. A lot of people will take that in this market. Similar story if you take a look at the NASDAQ 100, unchanged despite a beat on Alphabet. But the small caps really taking a beating right now, Matt Miller, down about 0.7%.
I'm kind of bummed out right now.
No.
My bubble has been burst because Simon White from the Markets Live team at Bloomberg in London has told me the swag breadth thrust indicator was triggered in August of 2008. And that means its perfect record is ruined. 6 months out, it was down big. 12 months out, it was still down.
19 out of 20 isn't bad, Matt.
True, 19 out of 20. Let's talk about these crazy markets with Jitanya Kandari. She's the Deputy CIO of Solutions and Multi-Asset at Morgan Stanley Investment Management. Jitanya, thank you so much for coming in and joining us here on set. We've had a string of up days, 3 in a row, and that only happens like once every 5 years. We have a chart of this, and you'll see how rare it is.
We'll show it in about a minute.
Was that a head fake? I mean, or have we put in a bottom in this market?
Million-dollar question. I think we really have to see how the trade negotiations pan out. I was in D.C. recently, and it seems like we are at peak trade uncertainty. So from here, I think the marginal incremental news gets slightly positive. Section 232, which is pharmaceuticals and minerals, are still being contemplated and thought about. But I think if there are some bilateral deals struck, the ones that look obvious are Korea and India, maybe UK, there may be some respite in the market. But I think the longer term issues of where the earnings and margins settle is still a question.
And there we have
Here's
the
chart.
As you can see, pretty rare to see these types of gains. But it's interesting to hear what you're saying, that any sort of incremental positive news will probably send this market higher. Talk to us a little bit more, though, about the mood music at these IMF meetings. I mean, what did the conversations on the ground actually sound like?
Too much consensus, which is interesting. Worries about U.S. growth, worries about U.S. earnings, worries about the dollar, and diversification into gold and cash. So I think consensus has really swung to that direction. So it's important to keep in mind. Even some of our dollar charts are indicating positioning in the yen has reached pretty extreme levels. So I think you could expect a bounce back, especially if there is some positive announcement. But I think over the longer term, I would question the margin sustainability in the market, because a lot of that margin improvement that has happened in the U.S. markets has been on account of globalization, which is now turning. So I would be worried from a longer term perspective on where those earnings are and what market multiples are assigned to that earnings. So I think longer term, there is still some room to expect more correction.
Are we at the point yet, Jitanya, where everything we've learned about finance, economics, and markets is now meaningless? Like, is this an absolute sea change in global trade? Will the dollar remain the world reserve currency? Do you still buy treasuries in times of fear?
Yeah, I think there's one thing where there's a sea change. The dollar, which is the reserve currency of the world, gives it distinct advantages. But with those advantages, it gives it a responsibility to act and preserve economic resilience and trust in the international community. And that is being questioned with the interference in central bank, with the interference in institutions, and that's what the U.S. stood for. So I think economics is working, right? Fiscal monetary policy in the U.S. is constrained, and that's going to also have an impact on growth. Fiscal and monetary policy in the rest of the world is much better, and that's why the markets are pricing in better outcomes in other pockets of the world. So I think economics is working. There's a regime change in the credibility of the dollar and what that means for institutional trust and stability. And I think that is something that is important to keep in mind because it's reflecting in the term premium in Treasury. So we are watching that. My hope is that, we've reached like the peak fear situation, but something to really keep a close eye on.
We have 30 seconds left, but that's a really big point, so I want to just meditate on it for a minute here. Is that investable yet? You said you're keeping an eye on it, the dollar's credibility as the reserve currency. Can you invest in that yet?
I think diversification, you cannot get out of the dollar because it's still a large part of the financial system in terms of reserves, in terms of debt, in terms of transactions. But I think diversifying out of the U.S. is making much more sense because, as I mentioned, the monetary policy, fiscal policy, is better in different pockets of the world. ECB cut, India cut, Philippines cut. That's one. And I think the currency valuations for the rest of the world, it's very heterogeneous, so you really have to be active, can be a very strong component of total returns for international markets. I've always said that currencies can contribute to a third of returns.
Right.
And that's an important tailwind for international.
All right, Jitanya, have to leave it there. Hope to have you back soon. That is Morgan Stanley Investment Management's Jitanya Kandari on a potential sea change. Now, coming up, we'll dig into those Alphabet results a little bit more in Open Interest. This is Bloomberg. Welcome back to Open Interest. A check on Alphabet higher this morning on strong ad revenue. For more on Alphabet and all things tech, I'm pleased to say we're joined by Mandeep Singh of Bloomberg Intelligence. So Mandeep, when we spoke to you yesterday about Alphabet for a preview, you said that you were still a little bit worried about the fundamentals here. Give us an update now that you've had time to digest from what we heard last night.
Yeah, I mean, look, for a company like Alphabet, they can pull a lot of margin levers, and that's exactly what they showed last night. The search margins grew even though the top line didn't grow that much. And what it shows is the search franchise is still intact. Look, their Gen AI results may not be superior to ChatGPT right now, but they still are adequate for a lot of the search users, which is pretty much the entire planet, when it comes to the traditional search. So net, look, they have diversified their business, cloud, YouTube, Waymo, but the search franchise, I think, is intact, and that's what they comforted the investors last night.
Mandeep, I keep seeing in Google stories on like page 4 that they may be broken up by the U.S. government. Why isn't that the lead?
Well, I mean, there are a couple of pending cases, the monopolization and the ad tech, and there could be remedies that come out of it. But there is no denying the fact that Google has more competition now than it did, 2, 3 years back. So from that perspective, if you're looking forward, I think it may be hard to come up with a remedy that involves divesting a business because they have a monopoly. And look, it has hurt them in terms of flexing their muscles when it comes to the ad integration they can show across the apps. But overall, I think they are showing that, diversification is helping their business. The cloud side will be a driver in the second half, regardless of what happens with the de minimis change, which will be a headwind. I mean, they called out softer 2Q and the fact that Chinese advertisers are pulling back. So I think what they have multiple levers. Even if something were to happen on the regulatory side, they should be fine.
All right, Mandeep, thanks very much. Mandeep Singh there of Bloomberg Intelligence. Coming up in the next hour, Citi's Kate Moore joins us at the desk. Plus, we speak to the CEO of a major food group and Ducati North America. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Katie Greifeld. Sonali Basak is off today, and coming up, stocks pausing their three-day rally as the U.S. and China sent mixed messages on trade talks. Meanwhile, you have Alphabet setting the tone for tech earnings, beating on revenue and profit expectations. Plus, we'll speak with the Ducati North America CEO about how tariffs are affecting the motorcycle business. That certainly matters for one Matt Miller. And dirt bikes. All that and more coming up. But we do have some data crossing the wire right now. University of Michigan sentiment, the final read for April dropping right now, coming in at 52.2. That is slightly higher than what we got when it comes to the prior read of 50.8. What's interesting and what we should be paying attention to are the inflation expectations. 1 year inflation expectations coming in at 6.5%. That is slightly lower than what we got previously of 6.7%. And then you take a look at the 5 to 10 year inflation figures, though, Matt. This might be concerning. Still unchanged at 4.4%. Bang in line, not making too much of a dent in the market. But when these preliminary figures came out and that long-term inflation expectation came out at 4.4%, it certainly sent some shudders through risk assets.
Yeah, but all in all, pretty boring numbers for the University of Michigan when they have previously moved markets pretty substantially.
Yeah.
And it is, like, the trade looks pretty boring, but it is an exciting day because, A, it's Friday.
It is, thank goodness.
B, we've had 3 days of more than 1.5% gains, which only happens like every 5 years.
That's true.
And Kate Moore is here.
She's actually sitting right to my left.
Yeah.
Should we get to her?
I'm excited.
Let's do it. All right, Kate Moore, she is Citi Wealth Chief Investment Officer. Talk to us about where we are in this market. I think it's a real sign of the time that I'm even breaking the final numbers on the University of Michigan, because usually we just break the preliminary and then we put it away. But where are we in the cycle, this market cycle, when we're taking a look at every single incremental headline and data point?
Yeah, and we're all obsessing about the soft data. Like every survey, every measure of consumer or business confidence is having kind of outsized impact on market moves. And of course, we are in a market where we're trading on feelings and not always facts. And I would say this is particularly true as we've been whipsawed by all of these headlines over the course of this last week. Yes, Matt, you're right. We've had these 3 consecutive days of 1.5% gains in the market. I would tell you that it's not a gain or a sustained period where people feel good about the market move. There's a lot of short covering, a lot of rebalancing, but in general, the number of questions is still enormously high as we enter into kind of the rest of earnings season.
We did have the swag breadth thrust indicator triggered, which we now know has been a positive indicator 19 out of the last 20 times since World War II. So I'll get by that and go straight to the terrifying quote from Torsten Slok's most recent Daily Spark. He says, the consequence of this trade war will be empty shelves in U.S. stores in a few weeks and COVID-like shortages for consumers and their firms using Chinese products as intermediate goods. Anna Wong of Bloomberg Economics said something similar. And I think a lot of people out there are pretty terrified, right? University of Michigan sentiment figures be damned, about what's going to happen. Like, I was ready to buy a motorcycle last month, and I'm now putting that decision on hold because who knows, right?
Well, I went ahead and bought some extra running shoes as my running shoes of choice.
What brand?
I'm a Hoka girl.
Me too.
Yeah. They are manufactured in Vietnam and China. And I just wanted to make sure there would be no shortage as I kind of ramp up my mileage going into the summer. I mean, I'm joking, but I'm also not joking. I've seen a lot of this analysis. And of course, we were looking at the days of container ships to different ports, what that might mean if China had stopped shipping or if companies had stopped putting orders in anticipation of these tariffs. And we're all coming to the same conclusion that there may be less goods on shelves at some point. We'll call it by Memorial Day. But we also know that a lot of businesses stocked up on inventory ahead of, this sort of stop in shipping. And that was simply like a smart move. If you don't know what's going to happen in the future, go ahead and pull forward some of the demand, just as I've pulled forward my running shoe demand.
Yeah.
And let's wait it out.
Well, I minored in psychology, and this really feels like a really good case study here because I heard that you're pulling forward your purchase of running shoes. I'm thinking maybe I should go on Roadrunner Sports and buy my own pair. And it kind of feels like this is how it happens. This is how we talk ourselves into a recession.
Yeah, and then this bringing forward of demand, as you mentioned, the more we share these stories and these anecdotes, we've been doing it on our team, I've been doing it with clients, and we're all saying, we're going to make these purchases now and then go into a wait and see mode to really kind of gauge whether or not tariffs are going to impact our daily lives. I think companies are doing the same. And as we're listening to CFOs and CEOs report over the course of earnings season, this is definitely the message, which is, hey, nothing's wrong right now. By the way, we're trying to model some things or, put contingency plans in place. But we are kind of pausing incremental spending. We are pausing incremental CapEx. We are pausing incremental hiring. And I think that pause is really going to hit, over the course of the summer, unless there's a significant change in terms of sentiment and in terms of the trade situation.
Right. I mean, everything seems to be on hold. Yesterday, we were going through at least 10 earnings calls had a CEO say uncertainty.
Yeah.
And we've seen outlooks put on hold. But there's some things you can't pause. I mean, if you have, like a retail investor has a CD that has matured, right? And needs to put that money to work, what do you buy here?
Yeah. So an uncomfortable bit of advice that we've been giving to our clients, and of course that gets represented in our portfolios as well, is that now is not the time to add to risk. I've been saying this for the better part of the last 6 weeks or 8 weeks, as it turns out.
Great timing, by the way.
It was good timing, but an uncomfortable message because everyone wants to see, wants to know, is there something that's, trading at an attractive valuation or that has great long-term growth prospects that I should be taking advantage of, given this price volatility? And the answer is we have no visibility into future earnings growth really at this point. I expect earnings estimates to come down further, even though we've had some decent reports and solid earnings in the first quarter. And I expect economic growth, numbers to come down further, even if we reach some agreements on tariffs, because we know the trajectory of the economy is down. It doesn't have to be a sharp down, but was slowing ahead of any of these tariff announcements.
We are, by the way.
Yeah.
More than a third into earnings season. We've beaten on sales by like 1%.
Yeah.
We've beaten on earnings by like 10% so far. So
it hasn't been bad. It hasn't been that bad, to Matt's point, but it just feels like it's the guidance that all anyone cares about because the numbers in the first quarter are stale at this point. And I want to talk a little bit about timelines here because you mentioned you wouldn't add to risk over the past 6 to 8 weeks. There was an interesting LinkedIn post from Wei Li of BlackRock basically talking about some of the same things that Torsten Slok did. You think about the disruptions in the supply chain, but she took some solace and maybe a little bit of a walk back from President Trump on trade this week. And she said, this is why over a 6 to 12 month horizon, I am cautiously bullish. So maybe you wouldn't add risk now, but 6 to 12 months, how does that sound?
Well, let me address this whole point around sales and then earnings.
Yeah.
So the revenues and then the bottom line, because this is an important thing. I've always said, let's not bet against the resilience of companies. And we know that in tough situations, they will do what it takes to deliver on the bottom line. But they need some certainty about the environment in order to do that. So while I expect earnings to come down, I don't know that they're going to be catastrophic because especially the U.S. large caps and the mega caps with all of these geographically diverse sales and lots of different businesses and really sophisticated systems for shifting capital from one area to another can, weather difficult storms. So that's point number one. But I think the bigger challenge here, and this is something that we're really debating, is what happens to demand for even high-quality U.S. risk assets in an environment where we have so little visibility into policy and to economic growth. And it's not just a question that we, as maybe U.S.-based allocators, are thinking about, but Citi is a hugely global brand. Our clients are incredibly geographically diverse. And as a result, we have to ask ourselves, if I'm sitting in another area, would I be putting incremental money into U.S. assets at this point in time, given the fact that we are less than 100 days into this administration and there is no clarity and there is no consistency?
And the answer is no.
The answer is I'm going to hold off on putting more money into U.S. assets, even if they're high quality, even if these companies can deliver on the bottom line, even if spreads kind of stabilize where they are on the credit side.
All right, Kate, great having you here. I hope we can get you back.
Yes.
I hope the answer changes to yes at some point. Kate Moore there of Citi Wealth. Let's take a look at some of the stocks that are moving this hour. Obviously, Google is one we've been keeping an eye on. It is the top gainer among the Mag 7 stocks. Not a huge gain, but up 3% because it had strong ad sales helping to drive revenue and profit above expectations. But Katie Greifeld,
yes,
your iconic American chip maker is another story.
Boy, just in the gutter when it comes to Intel, falling in a big way after new CEO Lip Bhutan gave investors a sense that it will take a while to fix the chip maker's problems, to put it mildly.
Dark outlook.
Yeah, this was his first earnings call as CEO of Intel, and you can see the reaction down 8% in shares.
There you see AbbVie climbing after the company released its profit outlook for the year on better than expected sales from newer autoimmune treatments, and that's a look at some of the stocks moving. We're going to talk about, I should say,
yeah,
it's my favorite motorcycle.
It's good to put that disclosure out.
It's my favorite motorcycle maker. It's the team I root for in MotoGP. World champion for 3 years in a row. Jason Chinook, the CEO of Ducati North America, joins us as tariff tensions make my favorite motorcycles potentially more expensive. Next, this is Bloomberg Open Interest. Let's get to high interest. Look at what's making headlines around the world. BYD is having a robust start to the year as it sees first quarter profits soar. The Chinese EV maker announcing net income jumped to $1.3 billion, surpassing estimates and beating Tesla on another key metric. Analysts expect little impact, though, from President Trump's auto tariffs, considering the company doesn't sell any cars in the U.S. Apple is trying to import most of the iPhones it sells in the U.S. from India by the end of next year. The move would accelerate Apple's shift beyond China as it tries to mitigate tariff risks. While China is still the tech giant's biggest production base by far, production in India is up 60% this year from last year. And President Trump says he expects to wrap up trade deals with U.S. partners looking for lower tariffs soon. He told Time magazine, quote, "I would say over the next 3 to 4 weeks and we're finished." But the president gave conflicting signals about the status of talks with China, even as Beijing has denied that negotiations between the world's two largest economies are taking place at all. Let's get to a very important commodity for me. Ducati is taking its legendary bikes off-road. The reigning MotoGP world champions recently revealed their Desmo 450 MX. It is the first production motocross bike from the Bologna-based factory and just won their first MXGP podium on that bike with Jeremy Sewer in Switzerland. The announcement, though, comes as global uncertainty strikes across industries, across sectors, hitting automotive especially hard. And joining us to talk about all that and more is Jason Chinook, the CEO of Ducati North America. Jason, so great to have you here. Thanks so much for joining.
It's a pleasure, Matt.
I'm obviously a fan, right?
Yeah,
so
I
make it clear, just so everyone knows. I want to normally be very unbiased.
This is why you came to work today. I know.
Yes, it is why I didn't call in sick this morning. So it's awesome that you guys have this new dirt bike out, and I want to talk about that.
Yeah.
But my biggest worry is tariffs, right? As someone who I collect Ducati motorcycles, and are they going to cost 25% more now?
Well, it's a valid concern, and the short answer to that is no. Thankfully, right now, we're actually only subject to the 10%, which is through the 90-day pause that's out there. And even so, we're evaluating really what of that do we need to pass on. I mean, that's something that we're considering. We haven't taken any definitive decisions, but we also are sensitive to the fact that there is price elasticity with purchasers of motorcycles. The good thing is that so far, we've actually built a pretty good plan to be able to carry us through, let's say, some negotiation times over the next couple months, which will put us in a good position, hopefully by the end of this summer, to have a pretty clear idea of where we'll go.
So how much inventory have you got stateside now is my main question. Like, do you have the new Ducati X Diavel here in size? Do you have, a lot of Multistradas? Because I imagine that's probably your best seller. And how many of these dirt bikes have you got over here?
Well, that's a great question. And actually what we did is we anticipated that this challenge was coming. You'd have to be living under a rock to not see what was going to end up coming in the first quarter of this year. So as a result, we ended up working very closely with our team in Bologna for our production, which is done there in Italy, in order to ensure that we had basically as much as we could to satisfy the model year 25. And it put us in a great position so that basically the inventory that's in dealer showrooms right now and some limited backstock that we have here in the U.S. will be able to basically carry us, like I mentioned, through the summer. In terms of some of the new models, those are model year 26s. And while we've already announced pricing on them, we haven't confirmed what we're going to do with those bikes. Let's call it post-tariff scenario. But I anticipate that it's not going to be anything that's going to change the game for us. I mean, it's important that we maintain a momentum. We've got solid, steady growth right now this year. And not just from a matter of volumes, but also profit. And we don't want to erode that, and we don't want to lose the clients.
So not a game changer. I am curious what the conversation, if it exists, sounds like with the administration, because we've seen many auto company CEOs come to Washington, talk to the president and his staff.
Giorgia Meloni as well.
There you go. Are you actively lobbying in any capacity?
Yeah, actually, last week I was in D.C. Actually, 2 weeks ago I was in Washington, D.C. with the Motorcycle Industry Council, meeting with different representatives from both the House and the Senate to basically share really the impact that it has. And quite candidly, it's less on Ducati and it's more on Main Street. And I think of the dealer network that I have 133 dealers across North America. It's important people understand what impact it has on them and the jobs that they have locally. So that was my responsibility to share that. And as a result, we've seen, let's say, some positive feedback and response. And I can confidently say that I think we have a pretty comfortable direction going forward, although that changes quite regularly.
It'd be great if we get a motorcycle carve out. I wonder about the dirt bike specifically, because this is a new place for Ducati, but you're almost guaranteed to be successful. With Paolo Ciabatti leading the race effort, I'm sure you're going to be getting more podiums, taking home a lot of trophies. And it's important to Americans as well. Dirt biking, motocross is huge in America. Is it going to be your biggest market?
Absolutely. In fact, I anticipate this is about 50% of the global market will be the U.S. or North America specifically. And that to me is really important. I've been a big driver of this project because of that. Because not only does it, let's say, gives us the volumes, but it also changes the perception of the accessibility to our brand. There's an excellent article I read a few months ago about the heart to the American motorcyclist is not what you think. And a lot of people think it's cruisers because of the dominant American brand out there. But really, most people start motorcycling riding dirt bikes.
Right.
And so, as we know, motorcycling is not rational. It's something we do because it's fun. We love it.
Yeah.
And you make that emotional connection. And off-road allows us to make that connection and make the brand accessible to other people.
So my question is, when you make a Panigale, it has to be made in Bologna, right? It's about the style as well as the racing. But a dirt bike, you could arguably assemble in the U.S. Have you thought about bringing any of that production over here?
Well, as you mentioned, it could be argued, but made in Italy is an important brand attribute. I mean, it's something that people, when they think of Ducati, they think of Italy. And you think of the things that are part of our values and style, sophistication, performance. We have people building our motorcycles that have been doing it for years, that have decades, that have that expertise that start from, let's say, the bottom up, and now they're building a Panigale. So I would say nothing is left off the table because we have to make sure that our motorcycles are priced at the point where people can still access them. But we also need to make sure that we don't compromise our brand as well.
Jason, we don't have a lot of time left, but I want to get a bit existential because I thought what you were saying about motorcycle riding, it's not rational, is really interesting. And I'm wondering how you bring new people into the sport, because you and Matt Miller are special breeds of cat. There is no way on earth I would let my husband ride a motorcycle. I ride horses, so I'm also not interested. But there's a lot of concerns about safety, and you see the stats and you can get yourself scared. And I would just wonder how you actually go about changing that narrative and bringing more people into the sport.
So that's another great question. I mean, our responsibility as Ducati is actually really to perpetuate safety and enjoyment as well, because you don't want to anesthetize the experience. You want people to enjoy it. But all of the technology that we develop when winning races, like on the level of MotoGP, actually that technology trickles right down to the end product and the end user. And so when it comes to things like traction control and anti-lock brakes and basically the stability to control of a motorcycle, the radar, exactly, it actually helps prevent blind spot detection. Those are the sorts of things that make the brand, make motorcycling more accessible to people, and hopefully alleviate some of those concerns that you would have. But quite candidly, it's not any probably less safe than riding a horse.
Sure. So that is also not
horse riding
rational.
can be dangerous. I will say that
They
for
are
me,
wild animals.
it's a third thing. So for me, like Keanu, like Brad Pitt, like Josh Brolin and Matt Miller, it's therapy, right? I need to clear my head, to get right, to strike a balance. I need to ride a motorcycle.
Got to get on the open road.
And let's listen. The danger is something that's exciting as well.
Yeah.
I mean, it is a bit of an adrenaline. I probably just like riding a horse. There's a certain amount of you being on a animal that is you can't control yet you're trying to manage. I mean, like a motorcycling is actually probably much more controllable, but the thrill of that is really something that we all live for.
Fair enough.
It's a very good point. Jason, great having you in the studio. Thank you so much for joining us. Jason Chinook there, CEO of Ducati of North America. Now let's get let's get you caught up on all things cars, and I talk about motorcycles a heck of a lot. In fact, Jason has been on this podcast with me. Check it out, Hot Pursuit with Hannah Elliott. You can download it at Bloomberg.com or on Spotify, on Apple Podcasts, wherever
you get
your podcasts. This is Bloomberg.
Welcome back to Open Interest. A quick breakdown of this market with the S&P 500 near session lows. You can see we only have 99 stocks in the green right now. Big tech trying to push higher. Tesla, Nvidia, Alphabet all higher right now, but it's not enough. Take a look at the sector breakdown. We have more red than we do green. Only 2 sectors out of 11 in the green right now. Communication services, consumer discretionary up there, but you take a look down at the bottom. Healthcare, consumer staples, materials dragging down this index. This is Open Interest.
President Trump says he expects to wrap up trade deals with U.S. partners looking for lower tariffs soon. He told Time magazine, quote, "I would say over the next 3 to 4 weeks, and we're finished." Let's get the latest now from Bloomberg's Tyler Kendall in Washington. So, Tyler, which trade partners are we talking about? What kind of deals are we expecting?
Yeah, hey, Matt. So there's big questions here about exactly what would also comprise a deal, since we know that this administration is really pushing forward that they're looking to clinch what they have called agreements of understanding. Our understanding is that would be more of a framework to work towards a larger and more long-term deal. Now, President Trump, on his way to Marine One earlier today, did say that there was good progress when it comes to talks with Japan. We know, of course, Japan has been prioritized in these discussions. One, because the administration says that they've reached out early and directly to President Trump, but also because it's one of those countries that's geographically close to China. And this administration is making clear they are prioritizing prioritizing those countries, including India and South Korea as well, in their bid to shore up support against Xi Jinping. Now, yesterday in the Oval Office, Treasury Secretary Scott Bessent said that they also were very close to one of these framework agreements with South Korea. He said that they brought their A game, in his words, and that they were going to be working out the technical details as soon as next week on what a potential framework could look like.
Well, you bring up Treasury Secretary Scott Bessent, and we know that he is playing a leading role specifically in talks with Japan. I want to go back and revisit something that he floated a couple weeks ago, this strategy that basically the U.S. is going to seek to reach trade agreements with a bunch of different countries and then approach China as a group, because it seems like that strategy is falling apart a little bit here. We know that Bloomberg reported yesterday that Japan, even though apparently they're getting close to a deal, is going to resist efforts to form a trade bloc against China. We know that the EU and China are speaking right now. So where do we stand on that sort of approach?
Right, exactly. And that reporting from Bloomberg News saying that Japan is really going to push forward if the U.S. ends up asking them to curb their own trade against China. And that could look like a few different things. Some of the proposals floated, including asking countries not to absorb excess goods that are going to be flowing into the market, as just one prime example, as this administration really does try to, as Scott Bessent said, form that bloc and then approach China together as a group. But at the moment, it appears that China is trying to shore up its own support, right? Xi Jinping had his own Southeast Asia tour the other week where he met directly with leaders, including in Vietnam and Cambodia. While at the same time, it doesn't quite appear, or perhaps there's ambiguity on whether or not he has called President Trump directly and spoken to President Trump directly. We should say in that Time magazine interview, President Trump did say that Xi Jinping has called him. He answered in the affirmative when asked directly. However, on his way to Marine One earlier today, when a reporter followed up if that call has happened since President Trump announced his tariff plans, he said he declined to comment, instead saying, quote, I will tell you when the time is appropriate. Let's see if we can make a deal first. When it does come to that deal, we're going to have to wait and see, as the administration floats that potentially we could see some revised tariff rates in the next 2 to 3 weeks. President Trump said in the Oval Office yesterday that could also include China.
Well, let's push ahead a little bit here, Tyler, and talk about what could happen this weekend, because we know that the president is traveling to Rome for the Pope's funeral. We know that there's going to be a lot of world leaders there to pay their respect to the Pope as well. But could we see any headlines when it comes to potential talks that happen in Rome?
So President Trump himself said that he will be having meetings, though he declined to say exactly with who. He was asked directly if that would include anybody from China's delegation. Also, another thread we're importantly following is that Zelensky is going to be there as well. And of course, in tangent to all of this, we are talking about trade deals with Europe, but also the ongoing war with Ukraine, which was a big focus yesterday when we had Norway's prime minister here